Today's investors' attention to Europe is related to these fundamental shift outside of the United States, try to see if there is a way to diversify their portfolio with an access to a region that can promote stability and can promote a certain amount of growth, which will not probably be exceptional as in the US, but at least could be backed by fundamental driver of performance that could be interesting and supportive monetary policy, fiscal policy, you mentioned it. So there's going to be a lot of changes from governments that were previously very much skeptical about maintaining a dynamic internal market. And Europe remains one of the biggest markets on the planet. So if they can get their act together, that could be a very interesting investment cases. One point, though, is that compared to, for example, the United States of China, Europe offers also a sort of a diversification from a sector perspective. They are not the same sector. You're not playing the tech theme, which is a great theme, but of course
there really isn't much tech in Europe.
Exactly.
Right?
So you're going to play other sectors. They could also benefit from the deglobalization shift, the reindustrialization shifts that we are seeing in the market. So not only a diversification from a country regional perspective, but also from a sector perspective. And this is something that investors really like.
So here's a but for you. I mean, I was going to bring up the lack of tech in Europe, but here's another but, and that is because of this ongoing trade war right now, primarily focused on the U.S. and China, but now literally involving everybody else on the planet, right? Because of that, if it's going to be hard for Chinese exports to get into the U.S., and we just saw the trade numbers, right? Chinese exports to the U.S. down 34%, right? The next big target that China's going to be looking at is the EU. It's got to be, right? So at the end of the day, if that happens, right, it's good news for European consumers, certainly, because it likely is going to mean lower prices for whatever comes in from China. But for European corporates and companies, though, there is the risk that they could end up being swamped by Chinese imports and Chinese flows. The same way, something similar has happened already in places like Indonesia, right, in textiles, in Thailand, in petrochemicals and things like that. So what is your counter to that argument?
It's definitely an issue. Europe remains an exporting powerhouse to a certain extent. So basically, a framework where countries are trying to look inwards is not necessarily favorable for the regions. That being said, though, I believe that the European Commission is very well aware that remaining the only open region for trade could be a disadvantage if the United States and China try to protect the internal market. So they will act. They're already acting. It's much more focused than the United States, but they are already acting. One of the things one can look at is the carbon adjustment tax. So basically we'll put some sort of a barrier to countries that have, let's say, high carbon emissions in Europe. That will help. So they are aware of it, but they are also aware that in certain sectors they are they have companies that can compete globally. So they are not necessarily willing to cut off completely with China, with South America, with Southeast Asia. So they will try to find a nice balance between protecting from, let's say, dumping to a certain extent, but at the same time maintaining a channel of discussions with the main partners, including the United States. So I do not see a big risk. It's something that could hurt GDP growth, but not to the point that will jeopardize the agenda. And that being said, once again, you mentioned before about valuations. This is a risk when you invest in corporates in Europe, if you buy them at very stretched valuations, because anything that upset the markets, then you see the drawdowns. But when you buy it at very reasonable valuations, you are protected. So it's still positive and cautiously optimistic.